Nvidia is investing $100 billion into OpenAI, and it creates this circular relationship where Nvidia invests in OpenAI, which turns around and buys from Nvidia. Is this relationship something that we should be concerned about? Can it create a bubble in the AI industry and maybe potentially cause some of these stocks to have massive drawdowns? We'll discuss that, but we've got to start with the multi-billion-dollar deal around one of the most popular social networks here in the United States, and that is TikTok. So we begin with Meta Platforms. For the week, it's 784, down about 5% the finished week at 744. You want to look at this one technically at the end of the program. Now, TikTok United States, folks, I think if this is true, that we've got a $14 billion valuation on TikTok US, I got to imagine this is one of the greatest values in all of social media. I had to check before I got on the program. Snapchat is worth about $14 billion. Now, I understand with these companies, we're including their global operations. A ninth tier social media site, Pinterest, is worth over $20 billion here in the United States. I'll take TikTok US for $14 billion. I understand that their user group skews somewhat younger, but there's a lot of stuff and a lot of commerce going on the site. And even as the momentum around their user growth doesn't seem to be as strong as it has been in the years past, the momentum of people continuing to use the platform seems rather strong. We've got a contortion of investors here in the United States, including Oracle will likely just earn revenue from the company continuing to use its compute, but you have also other tech titans coming in and a Chinese-backed company maintaining roughly a 20% stake. I don't think this impacts Meta or the other social networks as much, but this does solidify TikTok's business here in the United States, probably allows them to go forward with some growth plans. And I tell you what, TikTok has improved the other social medias from kind of a For You feed. I think Elon Musk over at X has done numerous things, including community notes and the ability to charge for one of those blue check marks and these types of things. And so these other social media sites actually make the other ones, including Meta's Instagram, better in the long run. Now, speaking of Meta and speaking of Oracle, Meta is considering tapping Oracle for an AI cloud compute deal worth potentially $20 billion. We'll talk a lot about Oracle on today's show, particularly when we get to OpenAI. There's this concern among some on Wall Street that Oracle's not going to be able to come up with these deals or be able to meet these deals. That stems from the fact that I don't think most people talking about Oracle actually understands Oracle's business. Oracle is not building the data center. Oracle is not pouring concrete. Oracle is not buying land. Now, Meta is doing that. Google, Microsoft, many of these other companies are doing this. Oracle's job is to come in 3 to 6 months before the data center is about to be open, and their job is to fill it with servers, something that Oracle has been doing longer than all of these companies. And in fact, Oracle has been doing it for so long, it's almost longer than most of these companies have been doing it combined. Oracle's whole business model is filling data centers with racks of compute, and the company does have some competitive advantages there. That doesn't mean Oracle stock didn't have a massive run up and maybe one that wasn't justified, but for the most part, they've got a great business and they probably got a lot more people coming to the table looking to use it. AI hasn't even really crossed over into the United States government, and certainly as we look globally as well, we'll have other stories as it relates to this. AI tools continuing to expand out globally. That is contributing to a lot of the compute and a lot of the investment that you're seeing. It's not just here in the United States, but AI is truly starting to expand globally. Now, this is for all my single men and single ladies that are tuning into the Investor Channel on this beautiful Friday afternoon. If you've got a Bumble, if you've got a Tinder, well, guess what? You're going to be able to get on Facebook Dating, and it has a new feature that is going to end what some people are calling swipe fatigue. This, I guess, is when you're on these phones and you're trying to match up with somebody, you're constantly swiping swiping left or right. Well, it seems to me AI could know your potential interests and match you with somebody that you could potentially swipe right on, and so you don't actually have to do the swiping. Now, I'm not on any of these dating apps, but I can imagine this would be an absolutely fantastic feature. Instead of having to be on your phone swiping left or right, the AI doing it for you, and then eventually you maybe check in on your matches or have some messages show up in your inbox. Seems to me that's a pretty good deal, and Facebook is coming to market with it. Now, Instagram crossed a new milestone of 3 billion monthly active users, and if TikTok United States is worth $14 billion, I gotta imagine Instagram is worth orders of magnitude higher than that. Now, these tech companies have really figured out how to play President Trump, and I say that respectively to the tech companies and the president. I think in their first administration, there was kind of an adversarial relationship, and I think they had 4 years to reflect on that, and they said, well, maybe that wasn't the best thing to have. They also went through 4 years of the Biden administration where wouldn't say that they were negative to tech companies, but there were some things that happened from the FTC standpoint and other types of things that didn't necessarily mean that that relationship was that great. So I think all of these companies have reflected on that, and they also see that Trump is certainly somebody that is very much transactional, that if you give him something, he'll often give you something back. You also have a direct line and, have state dinners and stuff and invite you. So these companies are taking advantage of it, and Meta forming a new super PAC, and I believe they're one of the bigger spenders in Washington. Part of this is Trump will do things like throw a wrench in your entire business model when it comes to an employee perspective. This week, President Trump announced a $100,000 H-1B visa fee. This rattles the tech industry, as many of these companies probably have, I don't know, off the top of my head, 25, 30, 40% of their workforce probably on some kind of H-1B visa. I might be a little overestimating that, but my guess, it's a large percentage of some of these companies. This is a dramatic increase over the previous fees, which I think were just a few $1,000s. Now, this is in tandem. President Trump does have what he calls, I think, the gold card or something. This is like maybe a couple of $1 million. And I think there's a meme going out there, or there's like a series of tweets where it's like, hey, buy a Rolex watch, go into debt if you need to. My advice to any of you, and I know we have an international audience here. In fact, I would say probably about half of our audience actually is outside of the United States. And what I would say is, if you can buy one of those Trump gold cards and you can buy citizenship into the United States, it's probably something you can go into debt for if you need to. Now, moving on to Apple. Start of the week at 250. This one, dripping up and down. Technically, this is unbelievable. If you don't look at technical charts, you're going to want to look at Apple as it finished the week up 2% to finish the week at 255. Company is working on an internal app. This is likely not something to go public, but they're working on a ChatGPT-like app that allows it to test and experiment with the new version of Siri, which is its voice-activated feature on its phone, which really hasn't been updated probably in the past decade or so. My guess is they're developing this in-house app to probably share with the ChatGPTs, and if they're going to partner with Google Gemini, they're going to allow this to be an internal tool that is then used by the AI, because my guess is Siri is going to be powered by either ChatGPT, Gemini, or these companies are going to pay for the right to do that. Now, there is a lot of people that have the opinion that Siri needs to be this main feature on the phone. I'm here to argue that when we're talking about multi-trillion-dollar organizations as it relates to Google, which is a top phone maker and a top phone seller, certainly with the Android operating system, and then Apple, the voice feature actually is not something that people actually buy the phones or even switch the phones. And again, a few people will do that, but when we're talking about trillion-dollar companies, it's the camera and its other features, battery life. But what Apple could potentially do is have an AI system that works better than almost anybody else's, because my phone has all my photos. It has my email. It knows my schedule. It knows how much charge and where I've been in my Tesla. It basically is in my pocket, and it knows where I am, the things I have to do, and the communications that are coming in and out. If Apple is able to integrate an AI system that coordinates all of that stuff and allows Tesla to tap into that and Gmail to tap into it and your weather app and all these things to tap in and create an ecosystem of AI, well, Apple obviously has a huge winner on its hand. And I think that's what they're going to ultimately work on. Why Wall Street is focused on Siri, because it's like whatever, it's kind of a punching bag for some people. The ultimate holy grail is to create an ecosystem where the phone is doing tasks for me, and in a lot of cases, doing it on device, so companies don't have to go to Oracle and CoreWeave and push so much of the AI into data center. A lot of the compute can happen on these phones because they're power enough to do that, and that is Apple's holy grail, and I think they actually will get there. Now, they offer a solid start on their core product. That's these iPhones. I popped into an Apple store. This was like a couple of days ago and got my hands on these things. The thin phone certainly is thin, but it is a prelude to a foldable phone. So Apple made that thin phone, and I think it'll sell reasonably well for this company. And it'll be one of the models that people gravitate to, but they will turn that into a foldable design moving into next year. So that's an important phone, not just from a sales perspective, but from an evolution from a technology standpoint. I really like these larger phones, the Pro Max, which would be the one that I get. They certainly felt a little beefier and a little thicker. I haven't pulled the trigger on a purchase because my phone is more or less doing just fine. But if I needed one, I absolutely would buy one. One of the companies that Apple competes with, obviously in China, is Xiaomi, and they're planning next generation chips for phones. And chips, we're talking about the system on chip, SoC, the actual computer chip that runs the phone. But they made a stunning announcement this week that they won't have one annually like Apple. So every year Apple improves the chip in the phone just a little bit. Now, if you're doing just basic web surfing and email, you might not notice that. But if you're gaming on your phone or you're doing some really hard edge computing on your actual device, certainly from a battery life perspective, the chip has an impact there. From a thermal and all those types of things, the chip has a big impact. Apple is one of the premier semiconductor companies in the world, right up there with Nvidia, Intel, AMD, and all the ones that we know of. And this shows you that even its competitors can't compete with it on a year-over-year basis. This probably is a little bit of a hat tip if you want to go further down the stack. It's probably a little bit of a hat tip to Qualcomm, which provides a lot of the alternative chips outside of Apple devices. And it's good news for Qualcomm if these companies are not able to do this on a yearly basis. Now, speaking of chip companies, I have a new favorite CEO in all of the stock market, and it is this Lip-Bu Tan guy. When he got hired on as the CEO of Intel, we didn't know jack crap about him. But this guy has been absolutely unbelievable, and he has skyrocketed the value of Intel shares. And you can probably tell I'm sitting on about 1,000 shares at about $18, $19 per share. And currently I'm seeing they're sitting at $35 per share. This guy is going out to the world's largest companies and the world's largest country, including here in the United States, with his hand out, and he's collecting checks. Now, it appears that he has potentially met with Apple, which is a company that famously kicked Intel to the curb multiple times over the past decade and a half, more specifically in its MacBook computers, to develop its own silicon, which is absolutely game-breaking and is one of the reasons why Intel has completely fallen off from an investment standpoint. My guess here, and I don't have all the information here, but he's trying to shore up relationships, because if you're going to build a foundry business where you are actually manufacturing chips, then you probably want to have a close relationship with Nvidia, which they certainly do over at Intel, securing a $5 billion investment just last week. And you probably want a close relationship with Apple, which also creates a lot of computer chips. Keep in mind also that a foundry service doesn't necessarily have to etch and actually manufacture. There is packaging and putting these things together, which could be an entry level for Intel, an area where they continue to have some competitive advantages over others. They could do some packaging for these companies in the early days, which then could also lead to further manufacturing of chips down the road. Moving on to Amazon. Start of the week at 228. When one of these stocks breaks down technically, your ears should perk up. And Amazon stock has broken down technically more recently. And so that should get you very, 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 very excited. Now, also, if you want to follow Amazon's cloud into 2026 and understand where the demand is going to come in, because for the most part, the Oracles and the Microsofts and certainly the Googles as well have kind of taken over from a story perspective, and AWS was taken kind of a back seat. But one way for Amazon to reaccelerate things is for Anthropic to really take off over the next year. The company continues to ramp up its global expansion of enterprise AI, where Anthropic does have some competitive advantages over OpenAI. And it already has a large customer base, and it's a platform that is less consumer focused and more API and business focused. The company revealed nearly 80% of its consumer Claude usage is actually outside of the United States. And that is why when you see these major cloud deals being announced, it's often being dissected and discussed by Americans that have this really narrow American point of view. What they are not witnessing or factoring in is that AI is going global, and America has a big advantage here, huge advantage, that we have American AI companies that are several steps ahead of basically everyone else in the globe. And so you have a huge opportunity here in America to solidify and secure your place, not just here in America, but globally as well. And there's going to be multiple winners in this space. And I think Anthropic could be one. And if Anthropic wins, Amazon AWS wins in a major way. Now, Amazon absolutely tipping its hand. Now, oftentimes these companies will come out press releases and tell you what they're going to do. When you get as large as Amazon, and most of you guys know this, when you get as large as Amazon, what you do is you just start doing stuff, and it's up for analysts like ourselves to analyze what they are doing. And what we are seeing is a clear strategy shift as it relates to grocery with Amazon. We've had multiple press releases, and we are starting to connect the dots over at Amazon. Several weeks ago, they announced that you had same-day delivery across thousands of items, including frozen pizzas and those types of things, here in major markets here in the United States, and that was going to rapidly expand. When they announced that, we wondered, like, well, how are they going to do this? Because I live in an area where, yeah, there's an Amazon warehouse here, but I don't think they're warehousing frozen pizzas and those types of things. They are going to have to either build grocery stores or they're going to have to partner. And we saw last week they partnered with Winn-Dixie, which is a grocery chain, I believe, in the state of Florida. And you are now seeing that in the United Kingdom as they are closing. They're actually closing these Amazon Fresh stores, which is a version of their grocery store, as Amazon is shifting out of the physical retail of grocery, which, again, most of you know is a very, very low margin business, single digit type margin. You can pull up the financials of Kroger, or certainly Walmart even is kind of a proxy for that. You can look at even the margins that Costco generates off most of its products. It's not a great business, but what is good is delivery. And if you can deliver for these grocery stores, well, you can collect a fee, and many of these grocery chains tend to be regional and don't have the infrastructure to do that. Well, Amazon has that infrastructure. So I think we are moving into an era where Amazon is going to be much more open marketplace when it comes to grocery. So you're going to be able to get your groceries delivered from a larger swath, not just Whole Foods, not just stuff owned first party by Amazon. It is going to be a marketplace, and that's very similar to how Amazon.com works. And so I think this is a great strategy. It's less capital intensive. It has higher profit margins because you're not selling the low margin grocery. And I think it's a winning strategy. We'll see how it progresses. Moving on to Netflix. Start of the week at 12.23. This one just hanging out. You got about 3 weeks before earnings, down about 1% to finish the week at 12.10. Netflix continuing to get into sports rights as they're going to exclusively stream a game that I will watch, as I'm a San Francisco Giants fan, and they're going to play the Yankees next year on opening day in 2026, and Netflix will have the exclusive rights to stream that. I believe that is likely the first MLB baseball game that Netflix will have covered. Now, the TV media rights for these leagues obviously gets more and more expensive. And the NFL has seen deals, I believe, from the NHL and the NBA in particular come across, and they were staggering considering how less important those leagues are from a TV standpoint than the NFL. So Roger Goodell, who's the commissioner of the NFL, he's thinking about renegotiating the TV rights with media partners in early 2026. These are deals that don't expire into, I think, 2029, 2030. What this could do is potentially ice out the Amazons and the Apples and the Googles who might want an expansion of a current deal, whether you're Amazon and you're showing the Thursday night game, or you're Google and you've got Sunday Ticket, or Apple, you want to actually get into this, or certainly Netflix, which I think is showing Christmas games. This is getting the Disneys of the world and the CBS and the Paramounts. It's getting them to come to the table early and put their bid in. My guess, though, is the tech companies will get the final say here, and by 2030, most of these games will still appear on kind of your traditional cable over-the-air type thing like CBS, NBC, and those types of things. But a lot of the distribution and the media will be controlled by the Amazons, Apples, Googles of the world, because they're the ones where tens of billions of dollars is not very much. Moving on to Nvidia, start of the week at 175. You had a huge pop on this very surprising news as it relates to OpenAI, and finished the week up about 2%, finished the week at 178. This comes as the company plans to invest over $100 billion, or up to $100 billion, in OpenAI progressively over the next several years to help them build these AI data centers. This was a massive story because Nvidia is essentially investing, or maybe even picking a winner in the AI race. They didn't do this investment in Anthropic. Now, they've done this as well, I'm sure most of you know, on what is often referred to as the cloud, or the kind of second tier, if you will, cloud computing. They've made a massive investment in CoreWeave, which we'll have a story on here in just a moment. They've made a massive investment into AWS, and by massive, it's not massive for Nvidia, but it's massive for these companies. $100 billion for Nvidia is actually a fair amount of money, but it obviously gives them access to the premier AI company here in North America. There are estimates that invvestment in OpenAI could be worth as much as $500 billion of revenue back to Nvidia, because Nvidia is pulling the $100 billion out of its pocket, giving it to OpenAI, if you will. OpenAI turns around and spends that $100 billion on GPUs. Nvidia then sells those GPUs to maybe like an Oracle, which then leases it back to OpenAI. So if you were on any social media this week, there were all types of memes and all types of discussions about the circular relationship of this, but it's all very much first grade analysis. First of all, wouldn't it have been nice if somebody had told you about Nebulas the day Nvidia essentially made the investment? Well, we did over at Equity Empire on our blog. We told you back in December about it, and Nebula stock is probably up fivefold since then. Sure would have been nice to know about Oracle before they made a lot of these deals and the shares have risen. Well, we certainly were alerting our subscribers of Oracle. In fact, the first investment, or the first stock batch of stock picks that we gave to Equity Empire Premium subscribers in April, Oracle was literally at the top of that list. And so a lot of what you're seeing on social media are people that are discussing this stuff 6 months after a lot of this stuff was already known. We knew Oracle was going to become a big player in cloud. It just was a matter of time for the deals to line up. Also, this circular relationship where Nvidia invests $100 billion, and that $100 billion is turned around and bought and used to purchase GPUs. This is exactly how the automobile industry has been run for the past 70 years or so. If you look at Ford, they have a financing arm. That financing arm finances the cars that appear on the dealerships, and then that financing arm then gives money to the consumer, which buys the car from the dealership. So this circular relationship is actually not all that uncommon. So I'd be careful looking at social media, particularly about people that weren't talking about Oracle 6 months ago. I'd be careful about listening to people analyze this stuff that weren't talking about these stocks 4, 5, 6, 7, even a year or two ago. most of what you see, even from larger accounts on these social media sites, is really just some guy that is doing this for engagement, and he's talking about the flavor of the week. And next week, if it's something else, they'll create content for that. And that's their business model, and it works great for them. But if you want to make money, if you actually want to use AI as a money machine, you need to look at it differently, and you need to know the full story. I posted a free blog down in the links to the description below. You can find a link to the Substack. This is completely free. I give a lot of very free nuggets here, and you will see, if you want to follow me on social media as well, back in March, I said if you listened to Oracle conference calls and you didn't want to buy the stock, you probably need hearing aids. When I tweet something like this out, it basically means you need to go over to your brokerage account and consider an investment in Oracle. That's exactly what I did. And I think that was roughly 170 points ago. So you can probably imagine when I go to Oracle World in 2 or 3 weeks, I ain't staying at the circus. Now, we also had earnings this week from Micron. This video and the analysis of this went to the premium subscribers, but it was a fantastic earnings day. Now, I know shares of Micron have gone from 166 down to about 157, but if you look at it technically, it's no big deal. Also, a lot of the good news, 46% revenue growth, beating both top and bottom line, raising the guidance, everything on the conference call. I mean, I've never seen a memory company talk so glowingly on a conference call. Usually when you read these memory companies conference calls, there's a lot of like kind of bearishness, and this also contributed to Intel stock having a great week as well. On the Micron conference call, they talked about traditional PC and what could be called maybe like legacy cloud computing, which is like just kind of your non-AI cloud computing. They were like, they're seeing strength there. So if you're seeing strength in non-AI cloud, data center, and in PC, well, that hits Intel directly in the face. And that is why shares of Intel over the past 5 days were up 18%, and over the past month up 45%. And I also have to say, wouldn't it be nice if there was somebody on YouTube who talked crap on Intel for years, for 3 or 4 years, all the way down? We literally talked crap on Intel for many, many years. And then I posted a video in January of this year, at the beginning of this year, and I said 3 reasons why I'm buying Intel. And since then, Intel shares are up 77%. This is also why I'll be staying at the Sky Suites at the Aria and not some low budget MGM hotel in a couple of weeks at Oracle. It's because, like I said, I've got a boatload of Intel shares, and I ain't selling yet. Moving on to Google, start of the week at 253, down about 3%. No big deal. You look at this one technically, it was needing a breather, and we got one this week as we finished the week at 246. Perplexity, this was interesting. Okay, Perplexity unleashed this, what they call a search API to challenge Google. I don't know if it's a challenge to Google, but this is interesting. The fact that you can actually build a new application. You can essentially build your own search engine, if you will, on top of Perplexity. So this would almost be like you tapping into Google and being able to create your own search engine, your own white label search engine, or maybe you want to only be able to search a certain version of the internet or a certain series of sites or those types of things. Now, AI can kind of do this for you, but Perplexity creating an interesting product here. If I were to put on my developer hat, I think there's a lot of use cases here. I actually think this AI API will be popular. An API is simply allows me to tap into the data and pay Perplexity usually kind of some usage fees. I don't think this changes, grandma or Grandpa Joe typing in a search box and those types of things. It doesn't change that, but this does change some ways you can release a product, and I think it probably will be a good one for Perplexity. Now, since we've absolutely nailed the data center, Equity Empire, we told you about Nebulas in December and Oracle, and we were on the forefront of what everybody is talking about today. Intel as well, the beginning of the year. Basically, the 3 hottest stocks, Oracle, Nebulas, and Intel, these were all things that we told you about. Well, what's next, okay? Because I'm always constantly, that's the past, okay? And if you weren't a subscriber, you didn't benefit, and so you don't care. And so you're probably wondering, well, that was great, Colin. I'm glad you have some people made money on those stocks, but I didn't catch it or for whatever reason, and that's no big deal. Guys, don't worry. The next thing that is going to get pumped are these robots, and it's going to start in November, when Tesla has its annual shareholder conference in the great city of Austin, Texas. They will have the robots at the forefront. And I do believe President Trump is planning some tariffs as it relates to robots. Guys, there are only a handful of American companies that can actually release this. This is very similar to AI in 2023. There was like one or two companies working on it and about to ship a product, ChatGPT being one, Anthropic being another, and then eventually Google. Right now, in the robotics phase that we are about to enter into, there are like two American companies. Now there's like 50 Chinese companies, but there's going to be tariffs and all type of political pressure and political barriers to have those robots make their way here to the United States. In fact, if I were to guess, they are not going to make their way here to the United States. But this is going to be a gigantic story moving into next year. Google DeepMind unveiled new AI models to allow robots to use websites. This will help drones. This will help humanoids. When I say robotics, we're talking about humanoids. We're talking about drones. We're talking about automation inside of different types of work environments. This is going to be a big, big, big deal. And you want to position yourself from an investment standpoint. And the good thing is, there's actually not that many companies you need to buy. Feeding into our idea that AI is just now starting to go global. I know that, a lot of you are watching outside of the United States. You've had AI, but now we are having that kind of rapid expansion moment. And these companies, Google, Anthropic, ChatGPT, they continue to invest and open up the markets globally. And in the AI world, this is different than previous generations where other companies could quickly catch up because of the expense and the knowledge required around AI. American companies actually do have a competitive advantage globally, and the faster they expand, the more opportunity that is there. Company continues to layer on Gemini, which is basically Google's term for AI, onto its other platforms, including Google TV, which has one of the clunkiest web interfaces I've ever seen. I hope they improve it. Moving on to Microsoft. Start of the week at 516, just hanging out technically basically flat this week or down about a point. Finished the week at 511. On the video game side with Microsoft, pre-orders for its ROG Xbox Ally X. That's a mouthful. In fact, I had to edit out a mistake that you probably won't see here. That is sold out on the Xbox store. These are these handheld kind of Game Gear, Game Boy like, and Nintendo DS or whatever the thing is called these days. I'm not a huge video gamer. Nintendo Switch, I believe, is what it's called. It's these handhelds. These are relatively popular these days. This thing was about $1,000. And it is sold out. It's available October 16th. I believe off the top of my head, Microsoft, I think 10% of their revenue is video games, so it's still something worth paying attention to. Now, Oracle unveiled its first Stargate data center inside of the great state of Texas. Sam Altman was showing that off live on CNBC. Again, there was a lot of misconception. I saw a lot of discussion around this, like Larry Ellison is out there pouring concrete. No, what you have to understand about the Stargate is both OpenAI and Oracle are not pouring the concrete. They're not in charge of anything out there. The only time they start to take charge is when the building is erected. And this is how the data center business largely works outside of Amazon, outside of Microsoft and the top guys. You have these companies, they come in, they handle all the construction, they handle all the real estate, they own the land. They have all that. And then Oracle comes in there and really just fills it with product that then they lease back to OpenAI. It allows everybody to focus on their core competency, OpenAI attracting customers and building software, Oracle making sure the database and the actual infrastructure works. And they've certainly proven that over like 50, 60 years. And then the real estate company that is in charge of the construction and all that type of stuff and project management and power generation, all those types of things, that is their job. The other thing that I pointed out in my blog post this week is that a lot of these capacity numbers are actually misleading if you understand how a data center works. When they talk about 1 gigawatt, 7 gigawatts, what you have to understand is a data center is never run at full capacity. In fact, it's usually a fraction of capacity. And so all these people worried about power capacity understand that you have decades, literally decades to get it online. And by then you've had all these efficiencies and all these things that have improved. CoreWeave, essentially highlighting a point that I've made multiple times, is that these deals that are being signed by the cloud computing industry. I remember listening to CoreWeave's conference call, and a lot of people questioned this $12 billion initial deal that CoreWeave signed. This was back in March of this year. CoreWeave signed an initial agreement with OpenAI that was valued at $12 billion. And if you go back and read the conference call and probably read your Twitter feed, people were like, there's no way they're going to get this $12 billion. My view of the situation, and again, I don't get my view from social media. I'm out there talking with people that are building stuff. I'm out there talking with customers of Oracle, out there talking with customers of CoreWeave, talking about people that are analyzing this industry, talking about people that are trying to build new AI startups. What I'm seeing out there is that these contracts are likely conservative, and that is why we continue to see them revised higher, including this week. The CoreWeave deal went from $11.9 billion up another $4 billion in May, and now they're coming back and adding another $6.5 billion. And this is what the market is misunderstanding, I believe, about Oracle. Now, it doesn't mean Oracle stock is just going to continue to go up. You could have moments where these things pull back, and I think it creates great buying opportunities because these deals are going to continue to be revised up at least into next year, at least based on all the capacity. If you try to start up an OpenAI or something that uses OpenAI, if you just go through that process, you will realize how bottlenecked everybody is from a capacity perspective, and that if you have an app already working, you have so much demand that it is unbelievable. Now, the other reason why I think these deals are very secure and likely will be revised higher is OpenAI hasn't even started monetizing. It is monetizing in the most elementary and rudimentary way by charging people $20 a month or whatever it happens to be for their subscription model. OpenAI could literally slap one advertisement on the top of its website, and because it's a top 5 website globally, it could make hundreds of millions of dollars a day in terms of ad placements. Now, it doesn't do that, but it will in the future. When you have a property that is a top 5 property, and you go look at the top 5 properties, YouTube, Facebook, Instagram, OpenAI is right there. These sites for a while under monetize for many, sometimes it's many years. In OpenAI situation, they are going to under monetize, which means the site is not going to be monetized and not be making nearly as much money as it possibly could. That will change over time. Part of that is advertising. That is why when you see these contracts that OpenAI is signing, they understand they literally could slap a Google ad and make hundreds of millions of dollars. But if they develop their own ad network and their own ad formats and their own creative ways to monetize their user base, well, they probably could make exponentially more than that. And that is what's coming for these companies. And again, people on social media, they've never built a website. They've never run ads. They've never spent their own money on ads. They've never used Google ads. They've never done any of these things. I'm coming to you as somebody that for the past 20 years, that is what I've been doing. If you see my account number on my Google ads account, you will see it's one of the earliest Google ad accounts that you possibly could have. I remember getting hundreds and hundreds of dollars of free Facebook ads because I was one of the first people to advertise on there. A lot of people commenting on this stuff have never done that. They've never actually done stuff. They're working 9-to-5 jobs. They've never built a business. They've never built multiple business in the ad space. I understand this, and OpenAI is one of the most under-monetized assets in the world right now. But that will change. Moving on to Tesla. Start of the week at 440. The stock basically going nowhere, up and down, up and down. Finished the week at 440. We've got earnings on deck for Tesla just a couple of weeks from now. This comes as the company is pleading the EPA to keep emission standards as it doesn't believe in alternative science. Now, we won't spend too much time on this story, but the EPA is controlled mainly by the federal government. And if you have a Democrat in office, they're going to push up the EPA standards, which hurts gasoline cars and make them slightly less competitive and make the automobile makers have to redesign them and make them get more miles per gallon. It's also led, in my opinion, to some of the decreasing safety that you see in some of these cars, because in order to get them to meet the EPA guidelines, you have to strip off some weight. And in my opinion, I wouldn't want to get in a serious accident in a lot of these quote unquote gas efficient cars. These standards were really put in place to incentivize having to sell, at least a portion of your sales, these electric vehicles. If you strip that away, well, you go back to making these big gas guzzling trucks. In my opinion, I think you let these car companies sell whatever they want. And if you're smart, you have an electric car, because it literally saves you money, way less maintenance. They're safer in a lot of ways, particularly if you're using the self-driving software. I've saved so much money buying Tesla cars. And believe me, I love Mercedes. I love the interior. There are multiple Mercedes that I would love to have in my driveway. I've had multiples in my driveway, but I drive a Tesla mainly because I'm cheap and I like to save money. Like Meta's Llama model and some Anthropic and OpenAI headlines, Grok receiving clearance across federal agencies. This is important because if you understand the history of Palantir, this is more or less how they built a really, really, really great business and a large business. They kind of infiltrated federal agencies, built a lot of software for them, didn't do it on high profit margin or even any profit margin. And then they've used what they've learned there and some of the systems that they developed. And then they turn around to enterprise, AT&T, your telcos and all those types of things, and you layer that on over there, save the company a bunch of money, and you start charging them an arm and a leg for the software. This is going to happen with AI. You're going to put Grok into the hands of government agencies. They're going to build some use cases for them, and you're going to be able to take the learnings from that and go apply it to the corporate world and create APIs and make money. Now, Elon Musk is really pushing for the pay package, and something that also gives them voting control over Tesla. Will likely have the results of that. My guess is that will probably pass. We'll see what happens. There's been some news as it relates to these federal EV tax credit. When you buy one of these EVs, you get an immediate $7,500 cash off, which you can apply to the down payment or the purchase price of the actual vehicle. It applies to, I believe, virtually all Tesla cars and most electric vehicles. That expires at the end of the month. They changed the rules that you didn't have to necessarily take delivery of the car by the end of the month if you are purchasing it. I believe if you're leasing the car, it needs to be delivered by the end of the month. If you're purchasing the car, you can put your order in for your Tesla. The $7,500 credit will be there when you're ready to take delivery. Moving on to the technical segment of the show, the S&P 500 was at a perfect place to take a little bit of a breather. We're on a daily chart, and you put up 3 red candles in a row, followed by kind of an inside green candle. That is a logical area to take a breather. We're also more or less 2 or 3 weeks away from earnings. Fed policy is more or less telegraphed, at least for the next meeting or two. The data that we're getting out of the job market, inflation is more or less kind of in line. So we're in that segment of the market where the human mind takes over. And that was partly what I wrote about this week on Substack as well. Not in a major way, but humans are really good at worrying. Like, things can be going perfectly and you can start to worry. And that is what happens in the stock market. When you don't have earnings to focus on, when you don't have guessing games with the Fed, when you don't have things to focus on, then you just start to worry. And so that's what the market is doing. You have a little bit of a pullback, but you're heading into earnings, which based on the inflation data and the job numbers, will probably be in line with expectations. Micron was a great indicator of that. Now, Meta pulled back in a very logical area. We've had multiple red days with Meta. You're pulling back to the middle of the channel. Remember, you've been in this channel for like 2.5 years now. You're pulling back to the middle of the channel. There's some great buying opportunities if you get there. Apple, absolutely blasting off. We were at the bottom of the channel. We consolidated around there. Look how tight. I mean, this is so beautiful. Those of you that don't look at charts, I must say a little prayer for you, because I don't know why you would not look at this chart. You hovered at the bottom of the range. Yeah, you had these like tariff blowoffs, but that's very typical with stock charts. Just a beautiful consolidation down here at $200 per share or so. And then finally you had your breakout above the highs at 213, and you went from 213 to 257 in the matter of like weeks. Now you're testing the all-time highs. This is an area, if you want to take profits on Apple, this can be an area where you do take those profits. What I encourage most of you to do is, certainly with the interfaces like with Robinhood and all that stuff now. In fact, I think they sent a notification out this week that like you should have multiple accounts. You should have a retirement account that you basically lose the password for, and maybe you have automatic investments and those types of things. But you should have an account where you captured this, where literally you bought this at 200, 210, 215, 218, 220, even all the way up here at 228. You could have bought this at any time and played this upside. Now, those of you guys that are doing the option thing, got margin and all that stuff, there were all types of ways to play this, but you should have played it. If you're watching this video and you watch the charts, you've got to take advantage of it when it gives it to you. And my point is maybe you got some Apple shares in retirement. No, you don't need to sell that. No big deal, especially if you're my age or younger. Forget about it. Don't even think about selling. But you had a short-term account where you bought some Apple shares because they were in a tight range. Everything else was soaring. That's where you capitalize. Amazon completely got rejected at 237. That is super exciting. You're creating great buying opportunities lower. You got earnings about 27 days from now. If this one wants to set up down here in like the 189 range, that creates a fantastic opportunity. Netflix also sitting right in the middle of the range. You've consolidated very tightly with Netflix. We'll zoom in on this. You've created a very tight range for the shares. Basically, since August, you've traded between 1188 and we'll call it like 1280. So it's like $100 price range, up and down, up and down, up and down. You've got earnings in 25 days, which I think is a little later for Netflix. You're setting up in a good range, allowing for some upside if the earnings come in decent. Speaking of trading ranges, after a massive blow up in a good way for Nvidia, you're consolidating basically in this 170, 180 range. You're looking for a break higher. The catalyst with this one might not come for 54 days, but you'll get all these hyperscalers come on conference calls over the next month and talk about how much money they're going to be spending next year. Google found the perfect spot to find resistance up here at this level. Pullbacks in Google very much can be bought. You do have a gap in the chart. If the gap fills, you've got a wonderful area just south of 213. Microsoft already had its blow off moment. You do have these pullbacks. This is very, very normal. The Oracle chart will probably look very similar to this over the next couple of weeks. You have these big blow ups and then you have kind of reality set in. You're consolidating here. With Microsoft, you don't got earnings for about a month, 32 days or so. If you set up closer down here to 465, it creates some interesting opportunities. And finally, Tesla. Absolutely beautiful. Just beautifully technically. You consolidated very tightly in the middle of the range, and then finally you had your breakout. This one is the first to report, which tends to be Netflix, but it looks like this time around it's going to be Tesla. They're reporting 19 days from now. Now, we understand that the delivery numbers are probably going to be good, so some of that is already being priced in. Elon Musk will be in full pump mode, as he often is on the conference call, talking about how the company could be worth more than basically every other company that's ever existed combined. And some people, get mad at that, but if you own, a fair amount of Tesla shares, you like to hear the cheerleading, but you're basically setting up at highs on Tesla. So it's going to be difficult, in my opinion, to really have that forward momentum, but there's some beliefs that you got new model announcements. You have advancements in full self-driving. I believe they have a new update of that coming over the next couple of weeks. That's something I'm using on a daily basis right now, and it certainly has really, really massively improved over the past year. And if you see a massive improvement there, that should do things. Also on the robo-taxi, notice that we're not even talking about that when, there's no headlines coming from that. And that is the greatest thing ever for Tesla, is the fact that they've got these robo-taxis. They don't got a ton of them, but they've got a lot of these robo-taxis, or a fair amount of them, out in the wild, and we're not hearing anything from them. That's fantastic news. And so all of that will be on the conference call. We'll see if Elon Musk is able to pump this one. Just like Apple, these are areas with Tesla, if you want to take some profits, certainly on a shorter term position, these are moments that you do it. Folks, the moment is over. It is Friday. September 26th. That was the FAANG Stock Recap Show. Hopefully you guys have a safe and fun weekend. Have fun with your family. Maybe watch a little football. My team plays on Monday. Everybody's writing off the Cincinnati Bengals, but they just happen to be in first place in their division, and we'll see what happens. Hopefully you guys have a safe weekend. Thanks for being a viewer. Thanks for those of you that are subscribers. Find the free newsletter down below. If you're on a tight budget, I think it does provide some insights. I'd love to see you over there. Have a great Friday. Have a great weekend, and we'll be back in 7 days. Good luck with your investments.